My name is Nur Najwa Fariha binti Muhammad Sami. I am from IC 1105BB and my matric number is 2019444124. The introduction of Islamic financial products such as Ijarah and Murabahah is the Sharia compliant financing contract nowadays. The purpose of this study was to examine how this Murabahah and Ijarah works in Islamic financial institution by examining the definition, legality, types, pillars and condition for both financing products. There are two guidelines used in measuring general accounting judgment in Malaysia, namely MFRS and FRIBI. Then several suggestions were recommended forward so that the public can have an initial awareness of Sharia compliant Islamic products and accounting before choosing to run a contract. Sharia-based accounting is one of the Islamic financial instruments used by Islamic banking. It is an accounting that follows Islamic law in controlling the position of the Islamic economy in a systematic and Sharia-compliant manner. Islamic accounting also defines a process of providing accounting information to stakeholders in order to achieve socio-economic objectives based on Islamic Sharia. Islamic accounting principles are very closely related to Islamic law and must be adhered to so that Muslim consumers do not use any elements that prohibited by Islam. In contrast to conventional accounting, which is capitalist in nature, Islamic accounting takes seriously the concept of halal and haram in Islamic finance. In addition, the Islamic financial principles of transaction emerge from the primary sources of Sharia and differ from conventional global practices. Islamic finance operates within the boundaries of prohibition against the interest, gambling, excessive speculation, and complex derivatives, among the others. The foundation of these regulatories are earlier sources such as the Quran, Sunnah, Ijma, and Qiyas. In Islamic Financial Institution (IFI), they set up an accounting and auditing organization for Islamic Financial Institution (AAOIFI) as the party that will manage Islamic accounting. Not only that, AAOIFI also provides auditing, governance, and Islamic banking ethics in accordance with Islamic standards. Furthermore, with the introduction of various Islamic products offered by Islamic banking, the financial reports made should provide information on the compliance of IFI with Islamic Sharia. It aims to achieve socio-economic growth as encouraged in Islam.
Literature review. The study investigates the issue and aspects of Ijarah and Murabahah Sharia-based financial products as well as their classification according to the contract agreed upon between the contracting parties. According to the research, it is critical to consider whether Ijarah should be accounted for under MFRS 16 leases or MFRS 9 financial instruments. When it comes to Murabahah, the most important thing for Islamic banks to do is determine the substance of the Murabahah contract before deciding on the best standard to use. To identify this, we must delve into scholarly writings on how the IF industry can benefit from a convenient point of reference that explains and clarifies the rationale behind current MFRS applications for IF.
For the methodology used the qualitative research approach, this research method also employs an internet-based material search strategy. This study data gathering method is to collect data and knowledge on this topic from journal and other sources such as Al-Quran, Hadith and fiqh texts that assist the research. It utilized to paint a clear picture of the Ijarah and Murabahah general consideration on accounting for Islamic financial products.
Next, I will explain about the Islamic financial products. The introduction of various types of Islamic financial products in IFI is generally to achieve the pleasure of Allah SWT in conducting transactions. As the public is aware, Islamic banking is an institution that offers Sharia-compliant products to each of its customers. The use of Islamic financial products is not only reserved for Muslim only, but its use is widespread and can be applied even to non-Muslim. Among the products offered are like Arahnu, Murabahah, Musyarakah, Mudharabah, Ijarah, Wakalah, Kafalah and so on. For this study, the main focus of the Islamic financial products described are Ijarah and Murabahah contract in Islamic accounting. In general, Ijarah is the usufruct of employment for services rendered. As for Murabahah, it is an increase in capital or profit after being agreed by both parties to the contract. However, some specific meaning, pillars, legality, types and conditions must be understood and must be fulfilled for the Ijarah and Murabahah contract to be valid. The explanation will be given in the next video.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Atira binti Imam Awang Sudadi 2019-23-2826 and I will explain about definition of Ijarah, legality of Ijarah, pillars, condition and types of Ijarah. Al-Ijarah comes from the word Al-Ajru which means change or replace. In Arabic, Al-Ijarah is defined as a type of contract to take advantage by way of the replacement of a sum of money. There are several definitions of Al-Ijarah by the scholars of it. Okay, first, Hanafi scholars define it as a contract for the transfer of ownership of usufruct for compensation. Shafi'i scholars define it as a transaction for a benefit that is intended, certain, permissible and can be used with a certain reward. Next, Maliki and Hanbali scholars describe it as the possession of the benefit of something that is allowed at a certain time with a reward. Basically, the four opinions of the above scholars have the same view about the meaning of Al-Ijarah. To conclude that, Ijarah is contract to transfer the right to use which is benefit of a good or service within a certain time to the payment of rent or wages, without requiring the transfer of ownership of the good themselves. In the form of contract Ijarah, there is no charge of ownership, only the transfer of use right from the lessee to the tenant. Al-Ijarah proven by the Al-Quran, Hadith and Ijma. For example, Allah said in Surah Al-Talaq verse 6, which means, and if they breastfeed for you, then give them their payment. The verse implies that those who have worked hard for something should be rewarded or paid. The verse indicates the existence of service provided so that it is obligated to pay wages appropriately. In this case, it includes rental or leasing services. Wages in this verse are mentioned in a general form, including all types of Ijarah. Evidence from Hadith is based on Hadith narrated from Ibn Ashar radhiyallahu anhu that the Prophet Muhammad SAW and Abu Bakar had hired a man from Bani Adil as an efficient guide. And he was a disbeliever of Quraysh, so 2 camels were paid to him, then he promised to come to the cave of Tur after 3 nights. So he came to them at dawn on the 3rd day. Hadith riwayat Bukhari. From Ijma, according to Ijma, all scholars agree that Ijarah is allowed. This is because Ijarah is meant to relieve people of their burdens. There is 2 types of Ijarah, which is Ijarah Ashkhas and Ijarah Asya. For Ijarah Ashkhas, it is concerned with the advantage included in workers' pay, whereas Ijarah Asya is concerned with the rent of product or the asset. Ijarah Ashkhas is a type of Ijarah related to leasing services, which is paying someone a salary in exchange for rented services. For example, individuals for jobs that need either mental and physical abilities such as motorists and teachers. The wages is determined by the length of time or duration of the job or simply by the completion of the required task. Ijarah Asya is Ijarah that deal with leasing asset or property. For example, giving others the right to utilize particular asset or property in exchange for rent. For example, vehicle, residence, furniture and others lease items. As a result, Ijarah Asya is separated into 4 categories, which is operating lease, financial rental, Al-Ijarah Mutahiyah Bitamlik, Al-Ijarah Tuma Al-Baik, and Mausufah fi Al-Dimah Ijarah. The pillars of Ijarah are consist of 4, which is first, Mu'jir and Mustajir, which is 2 parties in agreement or people who enter into a lease rent or wage hire contract. The second one is Sewa, which is a combination of Ijab and Qabul done by Mu'jir and Mustajir. The third one is Ujrah or wage. The Ujrah in the Ijarah contract must be understood whether it is seen immediately or in its whole. Lastly, the fourth one are the benefits. The benefit must be mutakawamah, which is valuable in terms of Sharia, in form, able to be handed over, and the benefit are felt by the tenant. Next, we move to the condition of Ijarah. An Ijarah contract is considered valid if it meets the following conditions, which are willingness of both parties. If one of the contracting parties make a transaction under coercion, the Ijarah contract will be invalid. Next, both parties must be a legal age and sound mind. Then, both of the contracting parties must be baligh, rational and know how to manage their property. Furthermore, the benefits that constitute a contract should be known to avoid any further issues. The last one is good that are the benefit. The last one is good that are the object of the transaction must be halal according to the Islamic law. That means, the items that are prohibited by Islam are not allowed in the Ijarah transaction.
Hi, Assalamualaikum. My name is Ijarah binti Muhammad Isran. I'm from IC1-105PA. My metric number is 2019-203478. So, I will explain about the Murabahah. Firstly, the definition of Murabahah. Literally, Murabahah is a principle of buying and selling, where it comes from Arabic words ribahu, which means profits. Meanwhile, technically, Murabahah is a trading by adding profits on capital. The added profit has been agreed because the seller must inform to the buyer the price of capital and the value of the added profits. And actually, Murabahah transaction has been used since Prophet Muhammad SAW and his Sahaba, where the both parties know about the price of capital and its profits. And nowadays, many Murabahah transactions are offered by Islamic banking, where the banks set the principal price plus a certain amount of the bank's profit margin that cannot be changed if it has been agreed by both parties. However, the scholar has different opinions about the definition of Murabahah. According to Hanafi, Murabahah is a transfer of something owned by the initial contract and initial price plus profit. Meanwhile, Maliki scholars say it is sale and purchase in which the price of the goods is mentioned by the seller and take profits from the buyer honestly by saying, I bought it for 10 dinars and received a profit of 1 or 2 dinars from you. Meanwhile, Shafi'i and Hanbali have a same opinion, which is Murabahah is a trading receive a profit of 1 dirham for every 10 dinars. Now we continue to legality of Murabahah. Murabahah is one of contract that allowed by Islam and accepted by majority of ulama among Sahaba and Tabi'in. And there are many verses in Quran state about Murabahah, and one of them in Surah An-Nisa verse 29. A'udzubillahi minasyaitanir rajim. Ya ayyuhallazina amanu la ta'kulu amwalakum bainakum bil batil illa an takunu tijaratan an taradin minkum wa la taqtulu anfusakum innallaha kana bikum rahima. which means, oh, you who believe, do not consume your wealth among yourself in a wrong way by cheating, gambling, and edge, except by the way of trade done by mutual consent among you, and do not killing each other. Indeed, Allah is very merciful to you. So, based on this verse, we can see that Murabahah is a trust sale where the seller need to inform the buyer about the price of the good purchase along with the value added as profits. There are also hadiths that allow sale and purchase of Murabahah. عن أبي هريرة رضي الله عنه أن رسول الله صلى الله عليه وسلم قال إنما البيع التراضي. The hadith narrated by Al-Bayhaqi and Ibn Majah means from Abu Sa'id Al-Khudri, Prophet sallallahu alaihi wasallam said, indeed, the sale and purchase must be done with mutual consent. So we can see that transaction such as Murabahah, which is buying and selling, based on mutual consent by the two parties who transact. Now we continue to the type of Murabahah. So basically there are two types, which is Murabahah with order and Murabahah without order. Murabahah with order, the bank will purchase the goods after receiving an order from customer, and the bank will buy suitable with customer wish and asking deposit in advance. So the purpose, the bank asking for deposit as a proof of customer seriousness, and this type valid according to opinion of Shafi'i scholar and Imam Muhammad Ibn Hassan. And second type is Murabahah without order. Murabahah without order is not binding because the bank can buy the goods without to have prior from customer, and usually the goods desired by the customer are available by the bank. Now we move to the pillars of Murabahah. Okay, pillars of Murabahah have 5: buyer, seller, goods, price, and sirah. Okay, so firstly, seller who the party has a goods for sale and purchase, and in a Sharia banking transaction, the bank as a seller. Second, buyer who the party need to pay a certain amount of money to the seller to obtain the goods, and in a Sharia banking transaction, customer as a buyer. So thirdly is goods. Murabahah transaction or contract often use a consumer-oriented object such as land, house, and vehicle. And fourthly is price or saman. Okay, price is a measuring tool in determining the value of an item, and the price of the Murabahah contract must be clearly stated and agreed between the both parties. And lastly, sirah. Sirah is an agreement for the delivery and receipt of the goods contracted, and the bank needs to inform to buyer or customer of the purchase price and the amount of profit offered. Now we continue to the condition of Murabahah. So as we know, each contract has set the condition and must be followed by both party in order to get valid contract. And the first condition stated by Murabahah is the parties who do a contract must be willing and not under compulsory, and they must be able to conduct the sale and purchase. Second condition is the object be contracted is halal and clean and must not forbidden by Sharia. Other than that, it also must be something that beneficial and exists so that delivery can done to the buyer. And if the object is defect, okay, the seller or the bank must inform to the buyer, which is customer. So if they agree to proceed the transaction, so the transaction is valid even the object is defect. And third condition is the selling price of the principal price must be plus with profit margin. So it cannot be changed during the term of agreement and must be reached a mutual agreement of the timing on the timing of payment. And lastly, the contract must be free from usury or riba, because as we know, the sale of purchase of usury is prohibited by Prophet sallallahu alaihi wasallam. And that's all from me. Thank you.
Next is general consideration on accounting for Ijarah and Murabahah contract. In the general considerations on the accounting of Islamic financial products, the issues discussed were on the recognition and measurement of Ijarah and Murabahah products consistently comply with Malaysian Financial Reporting Standard (MFRS) standards. In Malaysia, there are two guidelines applied in accounting. It is provided to ensure that the accounting process in Malaysia is in line with Sharia principles. The first, MFRS, provided by Malaysian Accounting Standard Board (MASB), and gained the recognition of the the International Body Islamic Financial Services Board (IFSB). MFRS has classification from MFRS 1 to MFRS 141, where each classification has its own meaning. Second, the financial reporting for Islamic banking institution FRIBI, which provided by Bank Negara Malaysia (BNM). BNM purposes is to ensure that the Islamic banking financial statement is issued, meet international standard and comply with Sharia. For Ijarah products, each of the stated MFRS has its own purpose to ensure that tenants and property owners act fairly in providing information and to ensure that users of financial statements obtain appropriate information. As for Murabahah, guided by 3 MFRS, which are MFRS 202, MFRS 15 and MFRS 9. The explanation will be described in the next video.
Assalamualaikum warahmatullahi wabarakatuh and hi everyone. My name is Nur Adila binti Abdul Razak. My matrix number is 2019-255374. Nature and definition of Ijarah. Ijarah can be utilized for deployment contracts or service hire. Ijarah in its classical form is often referred to as rental when employed for a purpose other than deployment or services. However, Ijarah may be done with an agreement to transfer ownership of the underlying asset by the end of the lease term or sooner. Some types of Ijarah are Ijarah Muntayya Bitamlik, which translate to Ijarah ending with ownership, and Ijarah Thumma Al-Bai, which translate to Ijarah followed by a sale. Next, recognition and measurement of Ijarah. Ijarah Muntayya Bitamlik and Ijarah Thumma Al-Bai are now treated as financial assets rather than leases under MFRS 9 and MFRS 16. This is to represent the agreement substance rather than its formal structure. MFRS 9 applies to contractual agreements that are not leases. According to MFRS 9, the Islamic banks must recognize the financial asset in its statement of financial position when and only when the entity becomes a party to the Ijarah contractual provisions. To evaluate if Ijarah financing should be calculated at amortized cost, the company must first determine whether the Ijarah financing meets both the business model and the SPI requirements. The business model test to keep the asset in order to receive contractual cash flows is very likely to pass. Next, presentation and disclosure. Firstly, Islamic bank as lessor. The Islamic bank must present assets held under a finance lease as a receivable at an amount equivalent to the net investment in the lease under MFRS 16 and on the basis of substance over form. Islamic banks must give the following information as extra notes. First, assets funded under this mode financing are owned by the IB Islamic banks throughout the tenure of the Ijarah financing. Second, the ownership of the assets will be transferred to the customer via a suitable mechanism at the end of the Ijarah financing. Such disclosures highlight the Sharia part of an Ijarah, which requires a lessor to hold the Ijarah asset for the duration of the Ijarah. Users will be able to make more informed selection as a result of this. Secondly, Islamic bank as lessee. When an Islamic bank enters into an Ijarah contract as a lessee, MFRS 16 requires the lessee to recognize the right of use asset in its financial statements along with a corresponding lease liability. This is the most significant change in MFRS 16. It should be highlighted that the right of use asset will be considered in the same way as any other fixed asset held by an Islamic bank. Similar to the rules in MFRS 116 property, plant and equipment, such assets will be depreciated and tested for the impairment.
Hi, my name is Murabahah binti Ijarah. I'm from class PIC 1105BD. Murabahah, nature and definition. The term Murabahah refers to a sale and purchase of an asset in which the buyer is informed of the acquisition cost and the markup. The sale price is usually paid on a delay basis by the buyer. An asset to be exchanged in a Murabahah contract must be one that the Sharia recognizes as valuable, identifiable and deliverable, as well as one that the seller already owns. The selling contract, which is founded on the element of trust in disclosing the cost and markup, is the unique nature of the Murabahah contract. The transfer of ownership of the item from the seller to the purchaser is a regular further of a sale contract. Murabahah and Murabahah to the purchase order are two categories of items described in the Bank Negara Malaysia Policy Document MPO. Murabahah to the purchase order MPO is a contract in which the buyer purchaser promise want to buy and identify a specific asset from a seller on Murabahah condition. If the seller acquires the asset, when the seller takes steps to acquire the asset, the wa'ad to purchase the item become binding on the purchaser order. The wa'ad shall be executed separately from and before entering into the Murabahah contract. Furthermore, by Vitamin Ajil, BBA, by INA and its derivative, the Tawarruk are products in Islamic bank that use the Murabahah framework. By Vitamin Ajil is a sale which delay payment of the price, which is paid over a period of time. By Vitamin Ajil is commonly used to finance a home or an automobile. By INA, on the other hand, refer to an agreement in which an asset is sold to a buyer on a delay payment basis and then purchased at a cash price that is lower than the deferred sale price or vice versa. Moreover, Bursa Suq Al-Sila in Bursa Malaysia is where Tawarruk commodity trade takes place in Malaysia. Murabahah contract, which include Murabahah to the purchase of the Zawaru and buy vitamin Ajil, can be viewed as either a trade or financing transaction. The applicable standards are Malaysian Financial Reporting Standard MFRS 102 Inventory and Malaysian Financial Reporting Standard MFRS 15 Revenue Recognition if the Murabahah contract is deemed a trade agreement. The appropriate standard is Malaysian Financial Reporting Standard MFRS 9 Financial Instrument if it is to be considered as financing. As a result, the most crucial thing for Islamic Bank to do is determine the substance of the Murabahah contract before deciding on the appropriate standard to use. In terms of accounting for Murabahah contract, there are two major factors to consider, namely content of a form and the time worth of money. A Murabahah contract must be a contract with a client in order for it to be accounted for under MFRS 102 and MFRS 15. In a true Murabahah contract, the Islamic Bank must also have acquired assets and held them until they are sold to client. If Murabahah is included in the funding, then MFRS 9 is applicable. To compare with MFRS 9, the entity must first establish whether the financing result in the creation of a financial asset. When an entity under MFRS 9 becomes a party to a contractual agreement, it will recognize a financial asset in its account. The asset is first valued at fair market value plus or minus transaction expenses. Following that, the financial asset should be assessed using the effective profit rate technique at amortized cost. The effective profit rate is the rate at which predicted future case payments or receipts are discounted to the net carrying value of the financial asset over the expected life of the financial instrument. The effective profit approach involves estimating the amortized cost of a financial asset or liability and then distributing the revenue over the appropriate time. Interest rates are simply used as a benchmark in assessing Islamic Bank profit. As a result, because the contract itself does not contain interest, this will not invalidate the transaction. Except for those held at fair value through profit or loss, financial assets are subject to an impairment test. If the expected life cannot be reliably determined, the contractual life is used. Presentation and disclosure. The financial statement for such funding should be prepared in accordance with MFRS 132. Furthermore, MFRS 7 requires that information on the importance of financial instruments as well as information on the type and amount of risk associated with such instrument be reported. Credit risk, liquidity risk, and market risk are examples of such hazards. In the note to the financial statement, carrying amount of each type of financial asset should be declared individually. In terms of disclosure standard, Malaysia Islamic Bank must adhere to the Bank Negara Malaysia guideline on financial reporting for Islamic banking institutions. This guideline outlines the information that must be provided in Islamic Bank financial statement, including information originating from Sharia contract used in Islamic banking operation.
There are 3 suggestions provided in this study to ensure the smooth running of accounting procedures and operation in Islamic banking in Malaysia. First, AAOIFI needs to ensure that all employees of financial intermediaries of Islamic banking institutions are expert in handling Islamic financial products by training the employees by providing them advice or practical training on a regular basis to ensure that the concept applied in Islamic banking are fully compliant with Sharia as provided in Fiqh Islamiyah to achieve the maqasid Sharia. Second, enhance the recommendation of Islamic financial knowledge to the public. Sharia Supervisory Board needs to promote more communication conversation on the offering of Islamic financial products and the benefit of Islamic economic growth in mass media such as on the television, radio or podcast to the public to ensure that they are more exposed and able to explore more about the knowledge of Islamic finance in financial market. Other than that, they also can introduce specific training programs to graduates or students in the field of Islamic finance to strengthen their knowledge in Islamic banking. Third, Islamic banking institutions should support the introduction of Islamic finance program and campaign by recommend to the people on Islamic instruments and products to strengthen the financial stability of Islamic banking such as Murabahah and Ijarah financing. In conclusion, in accounting considerations, fair value measurement, recognition, basic knowledge of Islamic financial products and various other aspects need to be focused. This is to ensure that the parties involved provide valid information in the financial statements for reference to consumers before making a decision. While both conventional and Islamic accounting have similar process, the additional aspect in Islamic accounting make it more in-depth and make it a necessity for consumers. It becomes a necessity because to avoid any transaction that have elements of usury, gambling and so on, to ensure that the entity operates in accordance with the Islamic Sharia principles. Consequently, the system aims to protect not only humankind but also the environment through socially and environmentally. Additionally, Islamic accounting has a comprehensive structure that relates coexisting contractual relationships with binding standards. That is, it consists of elements of recording transaction, corporate and individual functions, transactional moral ethics and exchange, all combined with accountability that has interrelational links to attain a sustainable Islamic finance system.